Opendoor stock has had one of the biggest comebacks of 2025 from 98 cents a share to over 750 now, which is over a 700% gain. Here's the thing though, this is not a meme like bounce. This is real fundamentals, macro tailwinds, and a housing setup that resembles late 2022. Watch this video and find out why Open's second bull run might just be starting and what catalysts could push it even higher. Opendoor Technologies, ticker symbol OPEN, is currently trading at $7.57, as we can see, and they're the largest iBuyer in the US, which is allowing home buyers to sell their properties instantly for cash using algorithms, data, and scale. Their platform essentially acts like a market maker for residential real estate, where buying homes directly, then reselling them while earning spreads and fees is their main business model. At peak, they were transacting tens of thousands of homes per year, revolutionizing how we sell homes and how everything is done on the market. But it was tough with the recent crises we've had, and after peaking about 34 during 2022, housing frenzy, Open collapsed below $1 as the Feds hiked rates, mortgage costs soared, and housing activity very much so froze. But 2024 and 2025 has flipped this. The stock has consolidated around the $1 mark in late 2022. It consolidated in the $1.50 to the $2 zone in early 2024, and in mid 2025, volume has spiked as institutional interest has returned, and we are now back at the $7.57 mark. The chart shows a clear trend reversal. There are higher highs and there's stronger momentum with bullish breakouts on increasing volume. This isn't like your regular dead cat bounce. It's not a short squeeze. It's a structural comeback. And if I'm looking at the chart here, I've been looking at this pattern forming, which I want to point out to you guys. It looks exactly like a double bottom forming on the chart. We could see here and here the stock has formed these two parallel bottoms, which are shown as right now and right then. So this is usually the time where you would buy, and there will be large term gains. This is very important as a buying time. I think this is right before the second run, in my opinion, where I think Opendoor will head right into the $10 to $15 range. There are key things that you guys need to realize. There has been revenue stabilization in 2024. The revenue came in at roughly 9.5 billion, which was down from the 2022 peak, but well above the other levels that we've seen in the tougher years. There's also transaction levels that are recovering, and there's lots of volume with people inside the business wanting to get in on this. Not only this, but we've seen the contribution margins that showed positive across nearly all major markets, which is a sharp turnaround from the losses we saw in 2022 and 2023. This is very important to look at as we watch the company continue to grow, and I think it's one of the main things. If they could stabilize the revenue and make this all positive, I think it's going to be a very bullish case here. So not only this, but we've seen the cost cutting. That the company has reduced their expenses by over 40% compared to 2022, making the company far leaner than what it used to be. Not only this, but liquidity. Liquidity's Opendoor maintains over $4 billion in revolving credit facilities, positioning it to scale quickly if housing activity surges. With this, the net loss is narrowing. Losses are shrinking significantly from over 1.4 billion in 2022 to under 250 million in the last 12 months. A key signal to institutions that the model is maturing and that we're about to see this become a very profitable business in the future. So I want to talk about some catalysts that are going to drive this next run up that we're going to see in the stock. So the main thing I think is the Fed pivot and major mortgage rate decisions. The market expects multiple Fed rate decisions starting Q2 2025. Mortgage rates have already started easing off the highs, but every 1% drop in rates can unlock millions of buyers and sellers across the market, which is exactly what this type of company thrives in. So U.S. housing inventory remains 35 to 40% under low pre 2019 levels. I saw something. It was in April 2019 to today, this month, like this year's April of this year, we've seen housing inventory under 50% almost, according to NAIR. Builders can't keep pace, which makes fast-moving platforms like Opendoor more valuable for liquidity and for quicker transactions. Their models were also battle-tested during the crash. In 2025, they're adjusting prices faster, limiting inventory risk and improving resale timelines. Also, one thing I want to point out is all their partnerships. One of the main ones is Zillow, along with integrations into mortgage and brokerage platforms. It's funneling its sellers directly into Opendoor's ecosystem. This distribution edge didn't exist in the same form during the first bull run we saw. At 750 a share, Open's market cap is still far below its peak. And looking at it now, it's still, the fundamentals are way stronger and leaner, where a sustainable return to profitability could force a multiple expansion, similar to what we saw in late 2022 at around this point. So not only this, but I want to point out the sentiment we've seen. Wall Street analysts have still been very conservative. We haven't seen too many price targets come in since the recent run up we've seen. But one thing I want to point out is the institutional holding that have grown steadily over the last 3 quarters. Funds that are dumping the stock in 2023 and 2022 have returned very quickly, and the retail also has started to catch on. So I think this is still a play in the making, and there's still a lot of time on this stock to be watching on the breakout levels. One of the main things I think that was crucial for the stock was the breakout above $5 a share in September 2025. This was divisive. It was strong volume, and it had lots of follow through, which we could see here, and it led to this stock that was now cleared major resistance at 7. And the next technical targets are 1050, which is, I would say, like, if you're looking at it technical analysis wise, it is the gap resistance on the chart. So the gap resistance is right around here on this chart, and we could see it anytime soon. And then also $14 a share seems to be at that resistance, which was a key level during the 2021 run in the stock. A confirmed weekly close above $8 a share would likely trigger momentum traders and algos, which would accelerate the next bull leg up, and I think it would cause the stock to continue to skyrocket. So in my personal take, Opendoor, this is not the same company from 2021. The company's proven it could survive a brutal down cycle, cut fat, improving its pricing models, and ride macro tailwinds. With housing activity recovering, liquidity still tight, and mortgage rates set to ease, I believe Open could enter a multi-quarter second bull run, potentially challenging 12 to 15 if fundamentals keep improving. I'm personally watching pullbacks back into the $6.50 to $7 as possible accumulation zones, with $10 as my near-term target for the cycle. So in all, I think Opendoor's first bull run was built on hype, but the second one is going to be built on execution, macro shifts, and genuine housing market scarcity, which we haven't seen in the market before. So all Open has already skyrocketed over 670% as at the time I'm recording this, but the catalysts are all lining up, and the real upside is still laying ahead. Let me know in the comments down below, are you in Open second bull run or sitting this one out? Let me know any other stocks you want me to check out. Make sure you like, subscribe, and have a great day, guys. Thank you.